What's going on, guys? We have some stuff to talk about. We just got PPI, and yesterday you may know we got CPI. So those are two major inflation data points that are now behind us. How did this affect the Fed meeting coming up? And you might think it affects it negatively because they did come in hot, but in reality, the market is even more so expecting a rate cut. Why is that despite some hot numbers? Well, let's talk about it. First off, PPI. It rose 3% year over year from the 2.4% in October and above the 2.6% increase that was projected. This is the highest year over year increase since February of 2023. On a monthly basis, prices increased 0.4% compared to the 0.2% seen in October. Seems like inflation is ticking up, right? Month over month, core prices increased 0.2% in line with last month and what was projected. Oren Klatchen of Nationwide said PPI isn't so scary once you get past the headline. And while the underlying data quells fears of a new inflation surge, they also don't suggest a quick fall to 2% either. It is going to be an extended and bumpy journey, and it has been so far, obviously, to the Fed's goal. And who knows, maybe we never surely reach that 2% goal. Maybe we just stay a little bit above it, and that ends up being just good enough. But basically, everyone's still expecting a rate cut despite CPI and PPI. And Paul Ashworth of Capital Economics wrote on Wednesday that the sticky nature of the CPI print is a little disconcerting, but we don't expect it to persuade the Fed to skip another 25 basis point cut at next week's meeting. And the CIO of BlackRock said the Federal Reserve can feel largely pleased with progress made. The bulk of this progress is behind us now, but inflation may remain stubbornly sticky near current levels for a time. I think what really solidified the rate cuts was some jobs data, and non-farm payrolls came in at 227,000 in November, close to the 220,000 estimate. But as said here, this report should be viewed in the context of the returning Boeing workers who had been on strike, and of course the return of workers not counted during the hurricane of the previous month. Therefore, the true payrolls figure according to this is 115,000. If we take the average of October and November to account for the distortions, it's 131,000. So the cooling trend remains very much in place. The unemployment rate has risen from 4.1% to 4.2%. And while everyone's basically expecting rate cuts, this article here says that the possibility of future cuts after December might get a little shaky. They are set to signal a slowing in the pace of cuts, with a pause at the January meeting looking very likely. And the risk to this view is CPI's print coming in hot. We just got CPI. This article was written during non-farm payrolls, and because of this, it's looking like we might not get that next rate cut in January. But yeah, going back to the Fed Watch tool, you'll see that it's a 98% chance of a 25 basis point cut, whereas it's under a 2% chance of leaving rates current. And if you've been watching this, you'll see that it actually rose when PPI was announced, when CPI was announced. But while those numbers were hot, they weren't as bad as they could have been. They're now out of the way. The chance of anything coming in and changing the direction of these rate cuts is now behind us now that we got through PPI and CPI, and I believe the market is reflecting that. There is nothing that can change the trajectory here at this point now. All right, now I do have some Bitcoin stuff to go over, some very cool stuff actually. First off, another indicator that the top is not in. As you guys know, we're watching the RSI on the weekly and monthly. We're watching the NUPL, or net unrealized profit and loss. There's something else that's not coming to my mind right now that we also watch, and we also have this, the realized cap hodl waves. I'm gonna add this to my little list of metrics to keep an eye on if Bitcoin seems to be topping. And according to this, Bitcoin is not topping. When the 6 month and below Bitcoin realized cap hodl waves band surpass the 80% mark, it's a good indication the market's overheated and a major price peak is likely. Currently, we're around 55%, plenty of upside to go for Bitcoin. And while it says there's plenty of upside to go, that doesn't mean there won't be a correction along the way. We're not just going to go straight up. There will be corrections in 2025. We're not just going to move straight up. So keep that in mind. I'm just reminding you that we might not go from 55 straight to 80 in the coming months. There might be corrections. There might be pullbacks first. And that is fine. Embrace it because we haven't topped out yet. So it's a buying opportunity. But here's the key insight. Younger age bands or coins held for 6 months or less tend to dominate during bullish phases, reflecting rising market optimism. Conversely, older age bands gain prominence during bearish phases, often coinciding with market bottoms. The dynamic allows the chart to serve as a barometer for market cycles, identifying periods of overheating and underpricing with remarkable accuracy. 80% is critical because in the 2013 bull market, the 6 month band surpassed 80%, marking the peak. 2017, similar thing, once it reached a high of 20,000. 2021, similar thing. At the current 55% level, there's ample room for Bitcoin to grow before reaching the overheated territory historically seen near 80%. Now, there is more to this article, so definitely read it down below. I will leave it down below in the description for you. And we have some pretty cool news coming from Texas. The Texas House introduces a bill to establish a strategic Bitcoin reserve. This proposed bill would enable the state to start building a strategic Bitcoin reserve. They wouldn't necessarily be buying Bitcoin outright, but this is a kind of interesting deal here. They'll be accepting taxes, fees, and donations in Bitcoin that would be held for a minimum of 5 years. The bill aims to provide a way to strengthen the state's fiscal stability and establish it as a leader in Bitcoin innovation. This guy right here, man, I don't know his name, but man, does he get it. Probably the biggest enemy of our investments is inflation. A strategic Bitcoin reserve investing in Bitcoin would be a win-win for the state. And funny enough, Pennsylvania was one of the first states to introduce a strategic Bitcoin reserve bill last month. And as many as 10 more states and 4 countries are in discussions to introduce similar legislation in the coming months. Oklahoma, Louisiana, Montana, and Arkansas have passed laws to protect the right to mine, the right to self-custody, right to run a node, and the right to peer-to-peer transactions. Are we going to see more and more states and eventually the US adopt this kind of a Bitcoin reserve strategy? What do you guys think? I personally think that might be, how do you say, the carrot dangling over our head and we're a horse trying to eat it. That's basically what we're going to be while we're hoping for this national reserve. I think we're not going to see it this cycle, but maybe next cycle. Similar to last cycle, we were talking about all this institutional adoption and we're kind of getting it this cycle. We're always a cycle ahead of schedule in terms of our expectations. And I personally think it'll take a while. It's not going to be something we see this cycle. If it is announced, it's going to be something that basically, in my opinion, will probably mark the top of this bull market. But what do you think? Do you think Bitcoin's just going to always go up and to the right from here on out and we're not going to follow a cycle? How do you feel about this Fed cut likelihood? How do you feel about Bitcoin and states adopting this strategic reserve? And how are you feeling about the Bitcoin miners? I know I didn't mention them today, but some are up pretty good, some are down, some are going parabolic. This is where we're going to get those big rallies for the Bitcoin miners if this cycle is going to be anything like last cycle. They're now moving to profitability, with some expecting profitability in Q4 now. There's no doubt in my head that they will get to some insane valuations as the hype draws in, as the FOMO intensifies, as the euphoria comes to its peak. But how are you feeling? Have you given up on the Bitcoin miners despite some of them outperforming Bitcoin from the bottom? Are you more interested in alts? Alts are definitely a good play, and diversification is important. Are you a Bitcoin maxi and you're just riding with Bitcoin? Let me know your strategy down below. Thanks as always for watching, guys, and I'll see you on the next one.